the jobs market was, the numbers we saw today were exceptional in many ways. We saw really strong headline growth. We saw higher wages. There was some weakness in the manufacturing sector, which points us back to what we're seeing now is escalating trade tensions. And the question for the administration is, how much are you willing to risk what you have in your hands, which is really solid economic growth that's buffering a really long bull market? How much of that are you willing to risk in terms of trying to get a better trade position with China? And I think the market is still waiting to see what wins out at the end of the day, strong economic fundamentals or escalating trade tensions as we saw just today.
And Thom, is that how you view this market reaction? Dow's down 51 points. I mean, we're well off the lows. It's a blip, considering what we've seen. Is it because we're getting very strong U.S. economic data, takes the sting out of some of these negative trade headlines?
No, I think absolutely. Look, we lost 8.8 million jobs during the Great Recession, and we've earned 19 million jobs back since this bull market began. And I think the greatest thing that came out of that news was that finally the workers are starting to benefit. 2.9% wage increase year over year. We've continued to advise our clients this is not a market that you want to be behind for long-term money. This bull market run has got a lot of legs yet in it.
The risk, I will say though, the risk of increasing tariffs are twofold. One, that companies pass along those costs to the consumer, and consumer has been the bright spot. 70% of the economy, we've seen consumer spending strong and escalating in the second quarter. Will consumers still keep spending when they see higher prices? We're seeing that the companies say that's their way out of higher tariffs.
Yeah, Rick, everybody trying to figure out how many hikes we're going to get from here to, well, next spring, let's call it. I don't know, where do you come in after talking to a lot of people today?
I still think it's probably September, December. And the issue is a good issue today in particular, David, because when I saw the numbers this morning, I really would have thought potentially steepening, that we'd see the long end outperform. But that short end just piled ahead. As a matter of fact, pretty parallel shift on the curve with respect to rates both on the day and on the week, still hovering just under 24 basis points on 10s to 2s. And the reason I bring that up in your answer is because as much as nobody really thinks that the signals in the marketplace by an inverted curve with central banks distorting long-end rates is the same signal it would have been 10 or 15 years ago, but that doesn't dismiss all the nervousness surrounding should the curve invert, and should that inversion be tagged with the fingerprints of the Federal Reserve raising rates. So without much more steepening, I would definitely think we are in line for two. But beyond that, if the curve stays like this, it's going to be a dicey proposition for next year.
Is that your forecast? 2 rate hikes this year and then maybe on hold for the Fed?
I think the strong jobs numbers put a lot of credence to that 2-rate forecast for this year. Next year is still in question, and I think tariffs will have a lot to do with it. We think, though, overall that the rest of the year we'll see strong growth. Maybe not 4%, but still strong.
So, Thom, add it all up for us. Are you still bullish on this market? I mean, we are headed for a down week for the S&P, at least, and the Nasdaq. Tech got hit hard. We've got now more rate hikes in the mix, or at least 2 for the year that you've just been talking about. Potentially more tariffs in the mix, with the president throwing out an additional $275 billion of Chinese imports and better U.S. data. How do you add it all up in terms of the view from the market from here?
Well, because fundamentals are still in place. Look, the U.S. has been subsidizing global growth for the last 70 years, and I think that these trade deals had to be renegotiated, and I think the market is going to look at that as a good thing. It worked with the EU. We got news out today. It looks like it's going to work with our neighbors in the north, Canada. China's been stealing our trade secrets. Things have got to be renegotiated there. I think, though, if you look at strong job growth, finally trickle-down economics is working, income is rising. Then we look at corporate profits at an all-time high. We look at consumer confidence, business confidence. These are fundamentals. These are the ingredients of a very strong bull market. We still think this bull market has some time left in it.